Hello, today is the 10th of May 2012. It is a Thursday. In the later end of March, I put this chart up, which is the 10-year bond yield for the Greece note, and well, it was around a little over 20 at that time frame, and it's an outside quarter, which means that the highest level was higher than the previous period, as is the lowest level lower than the previous period. Really, the first time it happened since here. And well, now let's take a look at where we stand today as we're into the next quarter. And well, the price has, or the levels anyway, has went up quite high. I'm going to put the data for the last so many quarters to give you an idea where we're coming from and obviously where we are right now. Today we made a high of 24.92. And this is from the Forex Pros, at least the current data is, and they say as of, I'm guessing a little while ago, it was just a little over 24. So it's obviously moving up a lot higher. This is just one heck of a little breakout that has the three candle upward correction, and then three nice upsized candle, a correctionary one, and when unsure yet of what we're going to see, because after you have an outside period, it's not that uncommon to have an inside one, especially when you've rallied a little bit and you're closing in within the middle of the last period. Let's take a look at this on a daily time frame, going back to when Forex Pros actually has this data. And this is what we're going to come up with. We have, this is a swing line daily chart, and the high of 43.92 occurred on March the 8th. The low of 1788 occurred on the 19th of March. So some sort of news got this to really crank large to the downside. But now we can do Fibonacci retracement, as it's been making this pattern of these higher lows and really breaking past this significant resistance of roughly around 22 or so. And the 38.2% retracement is in at 25.20, so we were just about a percent or so away from it with the current hit. It's going to be interesting to see how this Fibonacci actually plays out, because some people say that these stock indicators, a lot of the reasons why they work is because everybody sees them, and well, then that just becomes a self-fulfilling prophecy. Well, Fibonacci retracement is one that most people don't see, and I mean that on an exponential level, where this is calculated on an exponential mark, and when the price difference is really 1.6, 1.7 higher than the low, that's when it's really going to make a difference. And this one's about 2.3, 2.4, so it would make a little bit of a difference. And not many, I don't know how many people are actually going to be looking within this chart, but quite frankly, what I would be looking at is if this is not resistance and it just keeps going higher, or maybe you find a pattern where it just stabilizes somewhere, then uses this as support and does something like this, then we're going to have a fast move towards the next one, and that's in at 31.16. And same rules apply again, that if you don't have much resistance here, or it just keeps going higher, then that tells you the move from point A to point B is that of a failed move. And well, I think this is a chart that's going to be very, very, very important, at least within the macroeconomic picture, as we continue moving forward into the year of 2012. So thank you for tuning in, and have yourself a great day. Bye-bye.